Hey, what's going on guys? Box here, and today I am making a video going over every single MarketSpy strategy. So for anyone new to the system that gets this on their chart and just doesn't know where to start, this is going to break it down for you. So we're going to be going over market enemy, type 1, the ladder, market enemy type 2, which is Jackrabbit. We'll go over punch out, dragon skin, and mag 7. So from here on out, if we ever have any questions about what is a strategy and how to use it, we now have a visual representation of it. All right, so starting off, let's look at market enemy type 1. I used to get confused on what's type 1, what's type 2. And so the way that helped me remember it is market enemy type 1. A 1 looks like an L. They don't sound the same, but they look the same, right? Oh, what's type 1? Is that the jackrabbit or no, 1 ladder. So that's a good way that helps me remember it. Market enemy type 1. First off, why market enemy type 1? Why are we casting a ladder box? So market enemy type 1 is specifically based off of a big buyer continuing to support price. So when we look back here, we had a big buyer here, 1, 2, 3, 4, 5 times he keeps buying price, and we are above EQ3. Again, we're not taking these below EQ3. We're above EQ3. And so our goal here is to ride that buyer. Okay, so now you ask, but how? How do we ride his buys? How do we know where his buys are? The wicks. And that's what this system exploits. So when we see this here, we see that we have a huge buyer supporting. We expect him to continue to support. And so we look left, here's a tiny wick. That's a little small for me. I would at least want something like this. I would prefer like a nice pin. This is amazing. These are great. But this will do. Why? Because you can visually see with your eyes. 1, 2, 3, 4, 5. He keeps supporting price. And so if he is willing to buy it higher and higher and higher, that shows he has the money to do so. And that we want to be involved in that and let him push that price up. And so as long as we're above EQ3 and we have a nice wick, we cast our box. And as we see here, price came up, didn't get our fill, finally comes down, stabs into us, and then gives us our scalp. Oh, well, this is a 15-minute time frame, so you're filled. Average entry is probably somewhere around here. Yeah, 150 points. And so that is the logic behind it. And that is why we do not take these under EQ3, because there's no buyer supporting the trend. There's none. He's not there. If he was there, we would be above EQ3. So cut, dry, extremely plain and simple, that is it. That's the whole mold behind it. And when you look here, and you see it, and you're like, oh, okay, well, let me look for a wick. You got a wick over here. Well, now imagine in your head, if you get picked up, and if you're filled, is this gonna be the same trade? So again, here was our candle. If price chooses to drastically fall down, way down here, is this that same trade? If the chart looked like that instead, we're back down at these lows, is this that same trade? I don't like that trade. I don't want to buy this low here. This doesn't, we're under EQ3. I don't want to buy that right there. And so this is based off of what you have to think in your head when you're looking at these. So there's no wick here. All right, well, then I guess you could choose this one. Is this that same trade if you get filled? Price comes down. We're now closing under EQ3, breaking important lows. Do you really want to be filled on this? I don't want to be filled on it. I'd rather wait for a reaction and use punch out or something. And so in your head, you can imagine what the market would look like if you got filled. And to me, that would keep me out of a market enemy type 1 here. Because there's no good wick here. and our best wicks are way down here. And if price tries to break it double tops and then breaks an important low, which would be your fill, I'm not too confident in it. So just try to keep that in mind. Moving on to strategy number 2, the jackrabbit. This is following along the exact same lines as market enemy 1, but we're looking for a quick in and out. So the thought process behind this is every time it's been nice and slow coming in, that big buyer who keeps stepping up his bid is supporting it. So it's very nice and controlled. Down, down. See, it's very nice. But when we get these overly aggressive, just fall off a cliff, big plunge, all the bots are going to buy that for a mean revert. It's not trend continuation. You're only playing it for a mean revert. And so where are we looking to take profit? First sign of resistance. That is either here or here. How do we know if we shouldn't take it? Because that's really the most important thing here, is how do we know we shouldn't take it? Because as we see here, this paid, and this paid. So you think, oh, I should have taken them. No, you shouldn't have. And why? Because with this strategy, and like I said, they've all been back tested, that means they've been thought through. All the way through. This isn't a surface level thing. This is as deep as the iceberg gets. And so since they've all been thought through and back tested, we have invalidation triggers. And what are they? So we see a symbol. Are we supported by logical support and resistance or equilibrium zones? We're supported by EQ, okay? We're allowed to trade it. Signal valid at close of the candle. The candle is closed. It is valid. Okay, so we're still fair. Same time frame used for signal generation to manage your take profit and stop loss. Okay, our stop would be here because we're expecting an immediate reaction. Okay. Is there a yellow cross? Nope, we're okay. We can still take it. Is there a white diamond? Not allowed to take it. So we're not allowed to take this trade because there's a white diamond. Next, here it is. Oh, yellow cross, not allowed to take it. Again, here, nope. Here, nope. See this though? Above EQ, no bad signals, no red candles, no nothing. And she paid you. Good little first sign of resistance too. Stop here, bought it at candle close, underwater, and then she goes. And so, again, I cannot stress enough how important it is that we have these invalidations. So screenshot this. If you're in the Discord, there will be a link to this. So you can tag me if you can't find it, but if you go into the Armageddon side, the ARMA strategies, you will find a PDF with this information in. And so for all the Discord people, you have it. I'm not going to put it in the description because you got to be one of us to get it. So you need to take a picture of this or do whatever. So when we see these, you can validate the trade or invalidate the trade. We come over here. Oh, we got them together, the pre-order dot and the triangle above EQ3. That's looking good. Do we have a yellow cross or a white diamond? No. Okay. There's a wick there. That's not going to work. There's not one there. Our biggest one would be down here. We're not going to ladder that deep because we would already break EQ3 and be under it. So we know this is a jackrabbit instead of market enemy. And look at that. You buy it, one candle, and you get paid. So these invalidation triggers are so important. It literally will keep you out of a bad trade and a bad one. And it's hard, you know, when you look at some of these candles here, I mean, you bought candle close there, 250 points, you know, you bought candle close here, another 250 points. You buy candle close, another 100 points. Like, these are solid moves, but if you take those over long enough time, which that's what we're here for, we're here to do this as a living, it will not pay out for you. And with this being the riskiest trade in the system, we can't afford to not manage risk on these. So these invalidation triggers are a must. When you see a pyramid in your head, you need to immediately say, we're above EQ3. Okay, I'm still looking. Yellow cross, no. Okay, I'm still looking. White diamond, no. Okay, I'm still looking. Big wick to the left, yes, this is probably market enemy type 1. No wicks to the left, okay, this is type 2. Quick scalp, first sign of resistance. But you have to have these mental checklists. So again, if this was our trade here, and the stop is just very, I don't want to use the word obvious in case it's not to somebody, but with our premise being the buyer is stepping up his bid to support price, if we break that, well, clearly he can't support price anymore. So we don't want to be in it. And so our stop just goes to this low. We see our first sign of resistance. We go over to POETT's risk pane and we input that. And it'll tell us as much contracts as we can trade. We don't even need to touch our contracts. And again, if you're in the Discord, you have that, our special trading software, POETT, and you know what I'm talking about. So that is market enemy type 2. Moving on, we have punch out. This I'm not going to spend too much time on because it's so simple and straightforward. But punch out, we go into our settings here. We come down to punch out, and then you can choose what you prefer. I like bodies. But the idea behind punch out is there was so much aggression on the buy side that we expect continuation. And so when we see that color shift from white to red or white to green, we have a punch out opportunity. And so we are going to take this candle, for example, here. Of course, context matters. So are we above EQ3? Take them to the upside. Are we below EQ3? Take them to the downside. So, make sure you know where we are in relation to EQ3. If we just came pumping off this, I'm not taking this to the downside because we just found a ton of support. You see what I'm saying? What is beautiful about this is a simplicity. So we're above EQ3. We have our color shift to green. The trade is already set for you. As soon as we close above the 1.5, we buy that. We have our stop at the 0.5 and our take profit 1-to-1. It's literally that easy. If we're above EQ3, I take the long side. If we are below EQ3, I take the short side. Below EQ3, short side punch out, didn't close above the 1.5. You can kind of tell with your eyes here. Closed on it, but we never got a good close under it. Bam, closed under it. Right here. Right there. So these are specifically trend following. This is meant to follow the trend and get you in on it when it starts. And so we don't want to be buying these. See how it's like not consistent? Red, white, green, white, red, white, white, red, white, white. It's not clean and consistent. But then you see when we have our first true sign is this massive candle here, but it still doesn't quite close. If you bought it front running, you never got stopped out, you shouldn't. But this is our first real sign that a punch out is here. And then she stays red and then bam, we close under. We close under, candle opens under, we're short. Stop above, 1-to-1. So this is specifically trend following. So if we're going to follow a trend, EQ3 is the trend. So we don't want to be going against that. So when we are chopping around like this here, we don't want to be doing punch outs because you're going to get them back and forth, back and forth, back and forth. But notice here, we get under EQ3, your punch outs. I mean, really, it worked all the way back here, but I wouldn't be taking this because look at all these lows here. Like, look at the context, right? But then you have a low, reclaim baseline 1. They're switching back and forth, so we don't take that. If there's a white candle, we don't take it because it's not consistently going up. Here we get it. Close above the 1.5, and your profit was like right there. But you see the simplicity of it. You see the simplicity. It's already there for you. Upon candle color shift, you have your 0, your 100, your 1.5. If we close above that 1.5, we expect TP to be hit. And would you look at that, the exact top. So if you have a punch out here, for example, red, I don't have bear punch out, so that's why it's not showing at the moment. But if here's our punch out, we wick it, we didn't close under it, not interested. Fully close under it, okay, we are now short. Okay, well, 1, 2, 3, 4, 5. Not getting anywhere in 3 to 5 candles, we're out of it. Because this is, this is trend following. So we want to see continuation. If there's no continuation, that's lack of aggression. And so it's probably not a trend, it's probably a range. And so this is just the extreme simplicity of the punch out. And it needs to be the first candle. You're not right here and saying, let me draw a punch out. Oh, closed above, stop down here, target up here. You're not doing that. It needs to be upon the shift. And so why wouldn't you want to take this punch out here? Why would you not want to take this bear punch out? Well, one, thick dragon skin, thick, above EQ3 after a fat pump. And of course, luckily, we didn't close out of the 1.5, so we're still good. But why wouldn't you want to take that? Well, because it's not convincing. We just had tons of green candles. We're above EQ3. EQ3 is hard slanted, so no matter what comes down, until this goes flat, we're not going too low. So it's not worth the risk. Whereas as soon as this candle happens, bam, we close above the 1.5. We have our stop down at the 0.5, almost gets us, and then takes off. But the 3 to 5 candle rule would have came into effect here, because close above, 1, 2, 3 candles closing above, not getting anywhere. And we're right back at entry, or, close to entry. We would get out of this. We would take this for a loss because it's just not going anywhere. We want to see this go somewhere. And yes, we close above here, actually. So 1 candle closes above, 2 candle closes above, 3 candles closing above and not going anywhere. We don't want to be in this anymore. We want to wait for a new signal. And so if you have like a little loss like this, take that loss. Did it save you and come out? Yes, it did, but take that loss. Follow the system, because the system has been tested. The system is not tested with hold on to some and maybe none on the other one, and it's not tested that way. If it doesn't go, get out of it and wait to get back in it. And so that, very cut and dry, that's the punch out. Moving on, we got dragon skin. And so to identify the dragon skin, we see it here. Notice we don't really have any here on the chart, none here, right? And even to the short side, no real good dragon skin. But notice starting to find support, getting over baseline 1 and holding it. Dragon skin starts building. This here, I would say now, you officially have dragon skin. Here is now where you're confident in the dragon. Why is this? So the main thing about dragon skin is equilibrium zones need to be in order. So when we have dragon skin, but we're under equilibrium zones, we're not trusting this dragon, right? If we're under EQ3, we're only trusting the downside dragon skin. When we're above EQ3, we're only trusting the long side dragon. And so the whole point of this is, as long as your equilibrium zones are in alignment, meaning we're above EQ3, above EQ2 and 1, you want to buy these until shown otherwise clearly. And how do we get in on these? Checkpoints. That's the whole point of these flags here, is it's telling you, hey, we're going to dip into the dragon and get ready to buy it. It's going to look scary, but this is the whole point. This is the trend. So this market here is, relatively choppy, as you can tell, but you can kind of imagine the dragon going with the market. And so that's where we are expecting to find buyers if we're above EQ3 or sellers below EQ3. And so here you can kind of tell she's just getting started. If she's going to continue up, she's just getting started now. All baselines are above EQ3. Our zones are starting to stabilize and fan out. This is what we would want to see. And so basically, the dragon skin is a trend following system, and you get in on the flags. That is exactly how dragon skin works. If we got nice dragon skin and we are above equilibrium zones, the closer we get to a previous low where your risk reward is reasonable, these are the trades you want because your stop is so close. And for price to come down here, dragon skin would have to fail. All equilibrium zones would have to fail. And so that is what you're banking on with these. Very awesome, very simple and intuitive trade there. Let's find some more examples here. Notice we get above EQ3, price does, but notice how baseline 1 is still under EQ3. And you still get a move out of it, but notice how it's trying to get into the bullish stance, but this price action here looks tremendously different than this price action here. Do you guys see that? Do you see that difference there? And under baseline 1 is under EQ3. Look how we come way back down. And then we set a higher low and things start expanding outwards. It's substantially different than here. This is setting up for a nice run. Look at the dragon starting to thicken out. And so you can kind of just imagine all the buyers are in the dragon skin. And if we are above EQ3, we are above baseline, and we get a flag, it is go time. You are buying this. And the lower it goes to a previous low, the better the buy is. Because again, buyers should be supporting this. So if you have baseline 1 support and you're above EQ3, these are amazing buying opportunities. And so one of the most important things with dragon skin is it gets weaker with the amount of flags you get. So I believe CR said after 3 flags, you're really pushing it. So once we've been in a downtrend like this moment here, we get above baseline 1, hold baseline 1, and then we get that pump out. Your first flag is going to be one of your best buying opportunities. And then as your second flag and third flag, it gets weaker and weaker and weaker, or you just trust them less and less. But that's why we have different strategies, right? So you have 1 flag, you're above baseline 1, you could take that for a scalp. And this works on all time frames. This isn't time frame dependent. Again, second flag. Okay, well, we're not really getting anywhere at the moment, but you're still above. You still have dragon skin. Baseline 1's a little sketch, but you're still above EQ3 and all your equilibrium zones. So these are still okay to buy, but the goal is after 3 flags, you shouldn't be looking for dragon skins anymore. Okay. You see, especially when you look at here, you see the differences in dragon skin. Look how thick, how strong, how wide this dragon skin is. We are not breaking this anytime soon. So we can never judge the depth the pullback will be, but that dragon skin is supposed to show you how much pullback this trend can quote unquote take. So when you got a fat dragon skin, this can take a deep stab. When you got a real thin dragon skin, notice a thin stab. Price gets up, dragon skin's way down here, takes that deep stab. And then, just like anything, we'll eventually get through it. But this is that opportunity here, and that's what these flags are for. These flags are where you get in after we've had a move like this if you weren't in down here. Off this mag 7, off this punch out, if you didn't get this here, these are where you get in. But again, after the first flag is always the best buy. Second flag, second best. Third flag, third best. And you get less and less per flag. So notice this first flag here. Look at the monster you got. Second flag here, not bad. Look at your third flag. You're not getting anything. You didn't even put in a new high after your third flag. And then this was just sweeping everything before she relaxed. But I hope you can kind of see how this works. Again, we have a pump, a little bit of dragon skin. We're below EQ3, so it's sketchy, but we have a little dragon skin and we're above an equilibrium zone. Come into it, quick scalp out. But you can tell the strength of this has absolutely nothing on this. So it can kind of help you judge the actual strength of it and where are we in relation. Mag 7, cross baseline 1, backtest baseline 1, hold it, punch out got you in here. Say you came to the chart and you were here. So say you weren't able to get in on this baseline cross. Well, we have a flag. We have a flag and we have thick dragon skin. So go over to POETT. As soon as we get this, go over to POETT, ladder down to the bottom of that current candle's dragon skin and go over. Or wait to buy. However you want to get in, you can get in. And first flag, you buy it, you get some profit. And then as you can see here, if price is stalling around, notice how the dragon's getting thinner and thinner and thinner and thinner. Because that means this same buyer isn't here anymore. He got his orders filled. He's hanging out now. And so now we're going to need new buyers. He absorbed, lower, low. But I hope you can see that. That's dragon skin. Pretty straightforward. Just kind of shows you what the trend is doing and how it's doing. But with these, yes, equilibrium zones are unbelievably important. Your flags are where you get in at and find your most recent baseline cross. So downtrend, baseline cross, flag 1. Gave you a nice retest and look at the rip you got. Bam. Okay. Well, say you didn't catch that one, but you got another flag. That's flag 2. Gave you another good move. Flag 3. Pull down. Still gave you another one. Flag 4. So when you see this, you're like, okay, dragon skin and a flag. I'm buying this. Did you get something out of it? Yes, you did. But you gotta look where you came from. Here was our baseline cross. Here was the quote unquote start of this trend. Was this? This is what I struggled with. So I'm really trying to get this point across because I was very one-dimensional thinking because I didn't know what to think. So I'm trying to help you figure out what to think. And so I would say, well, why am I taking, why am I looking to buy this? I buy it here, it goes up, goes down, and, now I'm underwater. Why does some work better than others? And then CR told me one day, well, where did we come from? And I never put that into my head. Where did we come from? Well, wherever the flip of a trend is, it's always on a baseline cross. Always. And so 1 flag, 2, 3, we are 4 flags in. Is there something here still? Well, clearly we have thick dragon skin. We're above the equilibrium zones. So you will have an opportunity to make a little something, but you gotta look where we came from. Last but not least, we have the Mag 7. And what the Mag 7 is it's specifically telling you 7 things down here on MSX are all in a bullish or bearish stance. So the examples we're going to go over is bullish. But what we really need to be aware of is it is not a buy signal. A Mag 7 can be a buy signal, but it can also tell you a lot more than that. And so first off, we need to know how to identify a Mag 7. And what's so nice about MarketSpy is that it identifies it for you on the chart with these blue dots here. That's our Mag 7 signal. But more importantly, a Mag 7, the reason it's doing that blue dot is because there is 7 different indications down here on MarketSpy X that are all in the bullish stance. So first, the top C bars light up gray. Let's move this over. Our top C bar is gray. 2, our bottom is gray. It is gray. 3, green dot momentum wave. We just had one. VVS, blue or dim. Got it. Short-term trend flow crossing up and above 0. Right here was the short-term trend flow crossing up. Long-term trend flow over the 0 line or crossing up. And in this case, it's over the 0 line. And then Lightning MFI and RSI are both angled up towards the bullish zone, which is up here. And so CR, even in the cheat sheet we have in the Discord, you can get some bonus points, aka like a Mag 7.5, Mag 8, if the momentum Z is crossing, which it is here. And also if a big old GPS dot, aka one of these down here, is present. So why is this important? So what this is telling us is, in theory, the market should have just reset. So after, and not reset in the sense of, chopping around doing nothing. A Mag 7, after a GPS dot, of course, it should be basically the market. This should have been the bottom, and this should be the market actually turning, because the GPS dot is usually the bottom. So in a downtrend, that would be the bottom, the GPS dot, and then us maybe come up and now we're going to double bottom or something. That's when we're looking for that Mag 7. So let's get some examples here. Again, you don't have to memorize all of this for the Mag 7 because MarketSpy has already done it for you with the blue dot. If you see this blue dot, you know all 7 of these indicators are in alignment with each other. Let's look down here. We have a Mag 7 at the lows after a double bottom and a baseline 1 reclaim. So even if you do traditional technical analysis, 1, 2, 3 pushes, reclaim baseline 1, double bottom, Mag 7. This is huge. Yes, we're under EQ3. You know me, I love my EQ3. But anytime there's a pivot, the pivot is always going to be the opposite of EQ3. A bullish pivot is always going to be under EQ3. A bearish pivot is always going to be above EQ3. But with this specifically, 1, 2, 3 pushes, double bottom, reclaim, and retest baseline 1, Mag 7. This is a very good signal. We don't need this candle color shift. Is it a benefit? Of course it is. But it's not necessary. It's not absolutely mandatory. So this is your premier prime example of the market reset. We're showing massive divergence here, right? Look at, see this here? See how these are equal lows, but look at the momentum differences here. Massive, 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 massive differences here. And then we get the Mag 7. And look at what this has led us to. I mean, it's incredible. 125 points in NQ. And of course, Bitcoin, this is the traditional market, stocks, Forex, doesn't matter. Same, it's all the same. It's trading. It's an asset that's moving on a chart. So I wanted to show the premier pristine example. So that is very first in your head. We are never buying these without context. We are never just aping into these. We need to see something that makes sense for it to make sense, because the Mag 7 is telling you everything is in the bullish stance. And if a Mag 7 fails, it also tells you something. It's telling you that all those buyers just got absorbed. So for example, on this down candle, the red is the opposite of the blue. This is a bearish Mag 7. Everything on this list down here, but reverse it for the bear side. There is a bearish Mag 7 here. And notice how it fails. It's telling you there's tons of buyers here, right? Because if the signal doesn't go through, what is that telling you? It's telling you how strong that signal is, got absorbed. So not only did we absorb this bear Mag 7, we then printed a bullish Mag 7. So I just hope you're understanding that these have to have context to them. So that is your absolute perfect example of how a Mag 7 should look. 1, 2, 3 pushes, reclaim baseline 1, double bottom, Mag 7. Leads to great pump here. Next, we have a Mag 7 after 3 flags. If you've been using the MarketSpy system, you know that after 3 flags, we're expecting a red one. Well, 1, 2, 3 flags. Look at the distances between these flags. This is a fine distance here, but look at the distance here. This is rough. So you're already thinking, oh, maybe this is going to die here. You know, maybe if you just do normal TA. Oh, the trend broke here. Well, the Mag 7, this is where you would expect that red flag to come in for this to roll over. The Mag 7 is telling you, so not only did we turn the market, test EQ3 and found buyers, there's actual strength here. And of course, that one leads to, again, you know, the same monster rip, but use it exactly how it's intended. It is telling you everything on momentum is pointing bullish. So again, after 3 flags, we expect a red flag because it's the same theory as 1, 2, 3, red flag, 1, 2, 3, right? It's this, there'd be a flag here, yellow flag here, red flag, and now do it to the downside. That is the thought behind it. And so when we're expecting our red flag to be up here, because we've had 3 flags, the last 2 flags had no distance between them, we would expect this next high coming up to be a red flag to turn this back for another leg down. And here it tells you, hey, we got a bunch of buyers here. So just understand it's telling you everything is in alignment, but you have to read the context to it. So let's find some more examples. You see this one and you say, well, look how big it was. Why wouldn't we buy this one? Well, we are buying a Mag 7 after a lower low, not a double bottom, none of that. A lower low and under EQ3, not supported by baseline. There's nothing here for you to buy. This, you're buying raw market ordered buyers, just hoping to get this pushed through. There is no substantial structural basis, right? And so you have a high, you have a double top, lower low, and then lower high, and you want to buy it? No. This is just telling you all of the things are in alignment, but it's just telling you there's a buyer there. So you do not auto buy these. This is like one of the biggest things I hear is, I couldn't figure it out, or the signal failed, et cetera, et cetera. None of these are buy and sell. These are telling you what is happening. So again, here, for example, I'm not interested in this Mag 7 because there's no structural area for us. Again, look where this is. We're under all equilibrium zones, under all baselines, double top, lower low. We're under absolutely the whole world. Now look at this Mag 7. The bears had a nice run down, clearly found a bottom, tried to break it again found a bottom, fully above baseline 1. Now we're getting it. Notice that massive context difference here versus a double top lower low. This is not the same. They are not equal. And so this is what I really want you, as someone learning Armageddon, to really drill into your mind. These are not buy signals. Nothing on the system by itself, minus the punch outs, which are there for you, are click a button here signals. They're all to give you context, because what's everyone say? Context is king, right? It's all to give you context. So here, how could this indicate for us that this is coming? How could it indicate it for us? Well, we have a massive Mag 7 that gets swallowed. Again, this is showing you all 7 things on the momentum oscillator are pointing up, and they immediately got swallowed. That bear is King Kong of the bears, boys. They're strong. They're real strong. So it's telling you there's a big old bull that's getting eaten. This downtrend could have some serious strength. And of course, we get good strength. Then again, we try for another Mag 7 here. No double bottom. You can kind of tell it's just the sellers letting off and then hammering down, letting off, hammering down. There's no real buyers here. We're not holding any equilibrium zones, right? We get above EQ1, smash through it. Get above EQ1, smash through it. We're not holding anything for us to want to buy these. And so if they're failing, that is a bear signal. That tells you, hey, this trend is actually strong. This is a very strong trend. If we're sweeping the low of a Mag 7 candle, that buyer is now gone. And at some point, he's going to have to puke that position, which look at. Pukes right. Guaranteed, all these buyers are puking there. And notice, these bottoms here, it's just a drift, right? It's just drifting up. There's no aggressive buyers coming in, pushing price up. It's just a slow drift and then gets hammered. Slow drift, hammered. And so the Mag 7 is a really good indication that that's happening. But again, look at our perfect example down here. 1, 2, 3 push, double bottom, get baseline, hold baseline, Mag 7. Again, I really want to drill that in because this is where I use Mag 7s. If we're already over here, I'm using a punch out. If we are way up here, I'm using a flag entry. If we are over here, I'm going to use dragon skin or wait for this punch out here. I'm not going to be buying the Mag 7s. The Mag 7s are more or less just telling me the strength. Again, 1 flag, 2 flag, 3. We expect a red on our 4th. Oh, there's actual buyers here. All right, I need to put a strategy in play. We're above EQ3. Dragon skin's getting thick. Maybe I should, look for a buy down in the dragon skin with a stop below here. And that's what we get, right? Huge bear signals getting swallowed. Let's take this one instead. But it's more or less gearing you up to know that support is around here. And whether the support holds and gives you this monster rip, or if support doesn't hold, it tells you how strong the bears are. Let's get a couple more bull examples to really sink this in here. So what do we got here? We got a Mag 7 after a higher low. We're looking at this guy here. So this here, you're not real convinced of this uptrend at the moment. We're not holding baseline 1. Again, look at this uptrend. Look at this uptrend where we're deep stabs under baseline 1, barely holding it, and compare that with this uptrend here, nicely sitting above baseline 1. Notice how smooth that trend is. Whereas over here, look where baseline 1 is. We're having a really hard time holding baseline 1. But this is where that Mag 7 can help you again. Because since we're having a real hard time holding baseline 1, we would like baseline 1 in a trend like this. We would like baseline 1 to be something along the lines of this. Maybe cutting through a little bit. Maybe like that was a little bit of a stab or something. But this is ideally where we would like baseline 1 to be. And since it's not there, we need to rely on other signals because we can't buy baseline 1 retests because they're not really there for us. You don't want to be buying them at the high. You want baseline 1 to be under. And so what can help us get in for that that nasty drift up? No hard, strong, fast buying, just that nasty drift up until it's over. These can get you there. It's saying, hey, this ain't going down. Again, flag that immediately gets eaten and is just drifting. This is just a limit order bot under every single candle, buying any and all shorts. So these Mag 7s here can help you get into those. Because the far right edge, that hard right edge of the chart, is the hardest thing in the world to trade. Looking back, everyone's a genius. But that hard right edge in real time is a very different ballgame. And so that's why these can help here. Because look at 1 flag, 2 flag, 3 flag, 4 flags. Well, that's weird. We've 1, 2, 3. We damn near triple topped. And we're at our 4th flag. This might head down, not holding baseline. This could head down. Oh, Mag 7. Wow, okay, I guess there is a buyer here. And Dragon Skin. And above EQ3. Equilibrium zones look kind of decent. Our long-term ones do. But our short-term ones, kind of rough there. But this is telling you we got financial support. Over here, everyone knows, I have a video about it. If you haven't seen it, go watch the EQ3, the pinch video. Everyone knows I absolutely love EQ3. EQ3 for me is everything. And so we have a Mag 7 after an EQ3 bounce. So when the market doesn't know what it's going to do, it will finally have that explosive move out. But EQ3 will be tested. Price loves to have a stab into EQ3 to see if this trend is actually going to be real. And so you notice, look at those candle closes. There was a monster with limit orders just sitting here soaking and soaking and soaking everything the bears gave him. And not only did he have all that liquidity to soak that up, he also market bought more. So this is telling you, hey, this is very strong. This trend is going to keep going. And as you can see, we get, another 140 points. Granted, this is a trad market, so, trade it how you will, but it's just there to tell you, hey, there's still buyers here. But notice the difference of these signals from the very first one I showed you when it was extremely clean. 1, 2, 3, reclaim baseline 1, double bottom, Mag 7. After a reset of momentum. So the momentum reset, and we're wondering, okay, well, is this just going to come up a little bit so we can keep hammering down? No. Why? Because the Mag 7. The market reset. Now, are we going to go up or come crashing down? Mag 7 tells you there's a huge buyer. that at minimum is going to give it an attempt. So that is here. Just notice the difference in your head when you're seeing a Mag 7 here versus a Mag 7 like I just showed you. There's a huge difference between those. So that first one, I am taking that as a buying opportunity. These here, I'm taking them as an opportunity. Like there is strength behind this. Because if I'm looking at this, I'm not convinced of strength. Imagine the guy who aped in at the top here on candle close after he saw all that. He sat underwater for 2.5 hours before the market finally started going in his direction. This does not tell me abundance of strength. But this is hinting to you that there is a buyer here, and at minimum, he's going to give it a go. So until we see that red flag, we might want to keep giving these a shot or looking for an entry, whether it's a dragon skin, a pyramid, whatever it is. That's what this is telling you. So that is all of them. That is the strategies with Armageddon. I hope you enjoyed it, and I hope it was a good breakdown for you. I have other videos diving deeper into Equilibrium 3, diving into the pyramids, and more stuff over on the channel if you want deeper knowledge into that. And I hope it helped. Box out.